Good day, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Now, let's start the charts right here and take a look at what's going on. And this is what I want to show you guys. Let me see if I can get this a little bit bigger. Zoom in a little bit so we can see this a little bit better. This is a long-term chart for Bitcoin right here, going all the way back to 2014. And I'll tell you what I see. It's just like a painting when you go into a museum, you know. Some of these paintings, they're meant to stand back a long ways away to actually see the painting, to see it. And we're looking from a long distance here at Bitcoin, and I'll tell you what I'm seeing. We see the meteoric rise in price of Bitcoin. We see the first mountain that went up to over $1,000, and then it fell back down. And then we see the second one where it went up to $20,000 or more or less, and then it fell back down. And then we see a second high here of around 13,800, right? This is a consolidation pattern. What it's doing is Bitcoin is consolidating in a price at $6,500. If we look right here, we see more or less, we've seen a long period here of ups and downs, but it was leveling out right at $6,500, right in this area here, going back around back before it fell off down to around what was the low, around 3,700. We see a low here of 3,500, right? And we see these highs of 20,000, 13,800, and these real low lows of 3,500. It's almost like watching some of these charts that they create, you know, for like, say, an earthquake. You see the initial shake or shock or tremor, and you see the line bounce way up and then bounce way down and bounce way up. But after the tremor starts to settle down, you see what it'll start to do, and it'll start to go like this, boing, 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 to a certain level, right? That's what it does. Well, that's exactly what we're seeing here. This enormous boom, way up to 20,000 and down to 3,500, and then this one's not as high, up to 13,800. And then this next one probably won't be as low. It's you know, and it's consolidating on this line right here. If you see that line going right across there, that's where it's consolidating at. So if we kind of draw that line across here, you know, we're kind of looking at around, I don't know, $6,000, $7,000, $8,000 in around that line. You know, that line right across there. That's where it's consolidating on. And sure, we got dips way down below it, and we got rises way above it. But this is looking at what we're doing right now is we're looking at the long-term picture. We're looking at where this Bitcoin is consolidating at. This is a consolidation, and we can pretty much draw a line. If we look at the dips, and we take a mean average between the rises and the dips, and we can pretty much draw a line right across here probably. I'm going to say, I mean, you just kind of got to guesstimate at it, but somewhere around $6,500, $7,000, maybe $8,000 at the tops is where it's consolidating at. That's what's happening. Bitcoin is consolidating, and when these lines slowly start to come together, we're going to see Bitcoin go up, because if we look at this chart over the overall long term, what we can see here is a bull market that's never ended. From its infancy when it started in 2009 until now, if we draw a line across there, we can just see a constant sweep upwards. So what is that? Okay? Now, follow my line here, my chart. Let's hone in so we can take a good look here at this, because this is really important to see this long-term bull market. Now, I explained to you guys the consolidation part of it. Let's take a look at the long-range bull market here, and we can kind of draw an imaginary line sweeping upwards right here. Sweeping upwards. Follow that little arrow. It's kind of sweeping up like that, sweeping up like that, sweeping up like that, more or less. right? So right now, following that imaginary line, where Bitcoin is right now, would be around right here. So what price is that? Let's see, let's follow that imaginary line up from the bottom here, sweeping up to right here. What would that be? Around somewhere around $8,000 or $9,000. That's where it's right on track. It's like not that far below, a little bit below it, but more or less right on track. Now, if we keep that line going out this way, we can see it. If it keeps on going, it should cross 10,000 out about here. So it's 2019, probably sometime now in the 2020 area. It's probably going to cross 10,000 again. And then we're going to get these mountainous rises in price, because that's what it does. It gets these large spikes in price, like the one that went up to 20,000. Excitement comes back into the market. There's a lot of buying and selling. So that's what we're headed toward. We're heading toward another one of these spikes, but then a further consolidation later. But this long-term bull market trend is just going to continue outwards into the future. And we can actually project that outwards into the future, that long-term bullish trend, that trend line. And so this is going to actually continue. But there's one more thing about this. If we notice that long-term bullish trend line is swooping up a little bit faster and a little bit faster all the time. And right now we're actually a little bit on the high side of the price of that long-term bullish trend line. It seems to me we're a little bit on the high side of the price right now, even though the price has come down quite a bit. And we were in two bubbles here. 13,800, it was in a bubble, and when it was up 20,000, it was in a hyper bubble. Of course, they both burst now. We only had one of these really downside. It would be entirely possible to get another one of these downside bears that takes it down to about 3,500, but it wouldn't take it that low this time. And the reason why is because the momentum of the shift upwards, in other words, the springing action that caused it to go all the way up to $20,000, also is what caused it to go all the way down to 3,500. As we see it consolidating, it's just like on these charts when you see an earthquake. You know, the first major shake, boom, and the thing goes like this. Just shakes like that, up and down, right? But then it starts to settle down. It starts to go less and less. And that's the consolidation in the market. So that's what we're seeing here. It's exactly like looking at one of these seismograph charts that come from an earthquake. And this was the initial big shake here when it went up to 20,000. And now we see it. The next one's not as big, and the next one yet will be not as big before it gets ready to go into the next big rise up. In other words, the next big tremor comes in the market. So that's the way I see it. I see it's been in a bull market ever since its inception till now, and it's going to continue, but it takes time. Markets take time. You have to wait while they go through these consolidation periods, through these bear markets. Generally, they test bottom 2 or 3 times, you know, and don't get discouraged. Bag holders are going to be really rewarded. In this case, they're called HODLers. They're going to be really rewarded at the end game of all this. Okay? So listen, thank you guys for listening to this show. Like and subscribe. Stay tuned to my channel. Listen, created a couple new channels. I'll put the link to one of them or 2 of them in the video description. Can you guys please go and bookmark my new channels, you know? And I'm branching out a little bit more on the internet, more than just having all of my programs run on YouTube. Thank you guys for listening. Like and subscribe. Give me a thumbs up. You guys have a great day out there, and we'll catch you guys later. Bye-bye.